Hey everyone, welcome back to Corporate Decoder, the place where we shine a light into the shadowy corners of corporate filings. And let's just say things are getting interesting with CleanCore Solutions. Incorporated, this is their 2025 Proxy Street 8-mint, and it is packed with goodies, some you might expect and some that really make you scratch your head. Want to understand exactly what is happening behind the scenes at CleanCore Solutions Incorporated? Make sure you are subscribed because we're diving deep. And hey, if you love dissecting these documents and want to connect with other corporate enthusiasts, jump into our Discord community. The link is in the description below. Alright, let's get straight into it. We've got a big day planned for CleanCore Solutions Incorporated with their 2025 annual meeting of stockholders coming up on the 17th of December. Now, instead of a traditional in-person shindig, they're going fully virtual this year, which honestly some companies are leaning into for broader reach. You can catch the live webcast at a specific link if you are a shareholder and want to tune in. The main reason for this meeting, two key proposals. First up, it is all about electing the board of directors. 5 people are up for re-election and the company is firmly behind them. Second, they're looking to ratify the appointment of TAD, LLP as their independent public accounting firm for the upcoming fiscal year. Essentially, they want the shareholders' blessing on who is going to be looking over their financial books. Now, who gets a say in all this? Any shareholder on the books as of the 27th of October, 2025 gets to cast a vote. That is about 201 million shares floating around out there, each one carrying one vote. Whether you are a direct shareholder or your shares are held by a broker, you have the right to make your voice heard. And how do you actually vote? Well, CleanCore Solutions Incorporated is giving you a few options online, by telephone, by faxing in your proxy card, or by mailing it back. They're really pushing to make it easy, and honestly, they want to make sure as many shares as possible are represented, so please vote. These aren't optional suggestions. They are called proposals for a reason. Let's talk about proposal number 1, the election of directors. We've got 5 nominees, and the company is recommending a big 4 for all of them. We have Clayton Adams, who is the Chief Executive Officer and a Director. David Holm, the Chief Financial Officer and also a Director. Alexander Benjamin Spiro is the chairman of the board. Then there is Peter Fry, another director, and Tim Stebbing, who rounds out the director nominees. Clayton Adams, at 36, has been the CEO since June of last year and has a background in leading and growing small companies, even selling one successfully. The board sees his experience in scaling operations and his financial know how as key reasons for him to be on the board. David Holm, age 61, is the Chief Financial Officer and has a serious amount of experience, over 35 years in finance. He has worked with private equity firms helping their portfolio companies, and as CFO for a couple of companies, he was involved in acquisitions and restructuring. They believe his extensive finance background makes him a valuable board member. Alexander Benjamin Spiro, 42, is the chairman of the board and a well-known litigator serving as a partner at Quinn Emanuel Urquhart and Sullivan, LLP. His deep legal experience is what the board values. Peter Fry, just 34, joined the board in June of this year. He is currently overseeing investments at a real estate investment company with over $1 billion in assets. His significant investment experience is seen as a strong point for the board. And finally, Tim Stebbing, 46, also joined the board in September. He is the Chief Technology Officer at House of Doge Incorporated and is involved with the Dogecoin Foundation. His experience with Dogecoin is highlighted as his key contribution to the board. It is interesting to see that directors Spiro and Stebbing were actually designated by House of Doge Incorporated. This suggests a significant stakeholder has direct input into board composition. When it comes to voting for directors, it is a plurality vote. This means the 5 nominees who get the most for votes will be elected. It is important to note that withholding your vote for a nominee doesn't actually change the outcome. It simply means you are not actively voting for them. Moving on to proposal number 2, this is about ratifying the selection of TADAD, LLP as their independent registered public accounting firm for the fiscal year ending the 30th of June 2026. TADAD LLP has been auditing their financial statements since 2022, so this is more of a confirmation. They've been paid for their services, and you can see the fees in the financial table. Now, let's glance at the fees. For the year ending the 30th of June 2025, TAD LLP billed CleanCore Solutions Incorporated a total of $255,436. That is up from about $224,107 in 2024. The bulk of this, $165,326 in 2025. Was for regular audit fees. The rest, $90,110, falls into all other fees, which can sometimes be a bit of a catch, all category, so it is worth keeping an eye on what exactly those services entail. Shifting gears to corporate governance, CleanCore Solutions Incorporated has these corporate governance guidelines in place to ensure the board and management are aligned with shareholder interests. They're also emphasizing director independence. stating that all directors except Adams and Holm are considered independent under nice American rules. This is pretty standard, as management employees usually aren't considered independent. They've even got a separate chairman of the board, Mr. Spiro, who isn't the CEO. This structure is often put in place to provide a checks and balances system between the board and the executive leadership. The board met 5 times in the last fiscal year, and they've got the usual committees: audit, compensation, and nominating and corporate governance. Peter Frey is highlighted as an audit committee financial expert, which is a crucial role given their oversight responsibilities. This committee is responsible for finding and recommending director candidates, considering factors like judgment, skill, and experience. They also have rules in place for stockholders who want to nominate their own candidates, requiring specific notice periods. Now, let's look at the executive team. We've already met Clayton Adams, the CEO, and David Holm, the CFO. We also have Travis Buchanan as president, Gary Holst as chief revenue officer, and Marco Margiotta as chief investment officer. Some of these roles are relatively new for some individuals, which can indicate a company in flux or a deliberate strategic shift. Here is where things get really interesting. The summary compensation table for the fiscal years ending the 30th of June 2025 and 2024. For 2025, Clayton Adams, the CEO, is listed with a total compensation of over $2.1 million. This is a massive jump from 2024, where he received $110,000 in all other compensation and no salary or bonus listed. This report details an employment agreement with Clayton Adams. Starting the 5th of September 2025, it lays out a hefty annual base salary of $640,000, a signing bonus of $400,000, and a potential discretionary annual performance bonus of $100,000. There is a special bonus of another $100,000 if their digital asset treasury hits $100 million. They also agreed to grant him a significant chunk of restricted stock after a plan update. This is pretty aggressive compensation, especially considering the substantial stock awards and the targets tied to digital assets. David Holm, the CFO, saw his compensation shift in 2025. It was about $285,000, down from $204,000 in 2024. His salary took a pretty big dip from $191,000 to $152,000, but he received stock awards. Gary Holst, the chief revenue officer, had total compensation of $414,576 in 2025, up from $129,807 in 2024. He received a salary of $122,486, a bonus of $17,500, and a substantial stock award of $274,590. The details on these agreements are extensive. For Mr. Adams, his employment agreement is for 3 years, with automatic 1-year extensions unless terminated. The severance clauses are quite detailed, especially if terminated without good reason or by the company with cause. It really spells out what happens in various scenarios, which is good for clarity but also highlights the potential for significant payouts. It is also worth noting that before this new employment agreement, Mr. Adams was receiving compensation through consulting agreements with Bird Dog Capital, Incorporated, a company he owns. Initially, this was a monthly fee, but it escalated significantly, especially with clauses tied to an initial public offering, which they then deferred. The recent amendment to the consulting agreement also includes significant stock grants and deferred payments. David Holm's employment agreement, initially signed in March 2023, was amended in May of 2025. His base salary saw a reduction from $185,000 to $75,000, but he received stock options and restricted stock units. The severance clauses here are also detailed, including a 12-month non-compete and non-solicitation period. Gary Holst's employment agreement from January 2025 outlines a salary of $125,000, quarterly bonuses, and restricted stock units. His agreement also has a 2-year restriction period after employment termination, which is pretty long. Looking at the outstanding equity awards at the end of the fiscal year, the 30th of June 2025, shows a significant amount of unvested stock awards for both Mr. Holm and Mr. Holst. For Mr. Holm, these are tied to quarterly vesting over a year, starting in July 2025. For Mr. Holst, the majority of his restricted stock units vest quarterly over 3 years, starting in April 2025. These equity awards represent a substantial portion of their potential compensation, aligning them with the company's stock performance. Interestingly, director compensation is quite lean outside of stock options. For Director Peter Frey, a stock option for 150,000 shares was granted in June 2025. The options vest gradually over 24 months with 10% immediately. It seems they're trying to incentivize long-term commitment with equity. Apart from these options, the Executive directors didn't receive any other compensation for their service in fiscal 2025, which is quite different from the executive compensation packages. The heart of all this stock-based compensation is the 2022 Equity Incentive Plan, approved in 2022 and amended multiple times since it allows for a significant pool of shares, up to 25 million, to be granted as options, stock appreciation rights, restricted awards, and performance awards, and reward employees, consultants, and directors. The details about option pricing, exercise, and expiration are standard, but the sheer number of shares available shows a strong reliance on equity to incentivize performance. Now, this section always throws up some red flags, and CleanCore Solutions Incorporated is no exception. There are several loan agreements and notes involving executives. For instance, a revolving credit note of up to $500,000 was issued to Clayton Adams. While no advances had been made by June 2025, the terms are there. There is also a promissory note issued to Gary Holst for $316,920, which was later amended and restated for a larger amount, and had an interesting feature. It could be converted into shares of common stock at a conversion price of $1.12. This note was eventually converted into over 300,000 shares of common stock. Another promissory note, this one for $415,241, was issued to Clayton Adams with a 20% original issue discount. This note was later assigned to Travis Buchanan, the president, for a reduced amount. This note was repaid in September 2025. The sheer volume and complexity of these terms. Company loans and notes involving executives suggest a period of significant capital structuring or personal financial arrangements tied to company funding. And here is a really unique one: an asset management agreement with Dogecoin Ventures, Incorporated, a subsidiary of House of Doge, Incorporated, to manage their treasury assets. This involves paying fees in shares, cash, or Dogecoin. Given that Tim Stebbing, a director, is with House of Doge, and Marco Margiotta, the chief investment officer, is CEO of House of Doge. This relationship is quite intertwined and definitely highlights a focus on digital assets and potential partnerships within that ecosystem. Looking at who owns what, Clayton Adams, the CEO, holds over 6.1 million shares, representing about 3% of the company's stock. Marco Margiotta, the chief investment officer, holds 4 million shares, which is about 2%. It is good to see significant insider ownership, especially for the key executives. It suggests their interests are aligned with the company's success, at least on paper. The total ownership for all executive officers and directors is over 11.5 million shares, representing about 5.71% of the company. There is a note about Section 16 reports, which are filings about ownership changes for insiders. It mentions a few late filings due to administrative oversight for Travis Buchanan, Clayton Adams, and Gary Holst. Not a huge red flag, but it does point to potential internal control or procedural gaps in their reporting. This section covers other pertinent information, including timing for future stockholder proposals. The deadlines for submitting proposals for next year's meeting are clearly laid out, showing their thinking ahead about shareholder engagement. Finally, they filed their annual report for the fiscal year ending the 30th of June 2025. They mentioned that the full report, including financial statements, is available, and you can even get copies of exhibits, though there might be a fee. So let's break down the story here. CleanCore Solutions Incorporated seems to be in a phase of significant strategic repositioning and executive compensation restructuring, heavily leaning into digital assets with ambitious targets and substantial executive rewards. The compensation packages, particularly for the CEO, are very aggressive, tied to performance metrics that include hitting specific digital asset treasury levels. This is a bold strategy, and it signals a strong commitment to exploring or expanding in the digital asset space. The insider loan agreements and the close ties to House of Doge, Incorporated, through board and executive appointments and now an asset management agreement, suggest a deep involvement in the digital asset ecosystem. While aggressive compensation can motivate leadership, it also carries risks if targets aren't met. The company's ability to execute on its digital asset strategy will be crucial. What is my take? CleanCore Solutions Incorporated is making some high-stakes moves. The focus on digital assets, coupled with significant equity grants and executive incentives, suggests a company aiming for rapid growth and transformation. The question is, can they leverage this aggressive strategy effectively, or will the risks associated with untested digital asset markets and high compensation packages outweigh the potential rewards? With its strong links to the Dogecoin ecosystem, is certainly unique and warrants close observation. It's a company clearly charting a distinctive path. Alright, that is our deep dive into CleanCore Solutions, Incorporated's 2025 Proxy Street 8-ment. What do you think about their aggressive compensation and their dive into digital assets? Drop your thoughts in the comments below. If you found this breakdown valuable, hit that like button. It really helps us out. And subscribe for more corporate explorations. Don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.